How many payment methods do you deal with?
In excess of 100 at this point. And specifically for APAC, most countries are covered. So what we try and do is offer critical mass in every market that we operate in. So a merchant will get access to a large base of consumers, at least 80 to 90% of the consumer base in the particular market they want to target. I can give you an example of a merchant called Zenium. Must have heard of them, very innovative dental company. They manufacture aligners. They were operating in three markets, and they turned on Primer and they expanded to six more new markets in like 3 months or 6 months, right? This is typically not possible as quickly as they did, just because you need to go and establish these relationships with these services, then integrate with them and then turn them on. But here it's just a click of a button and then you get access to this whole new market where you get additional revenue. So that's the power of the platform.
There are many things that are keeping us on our toes. One of which is obviously the pace of the changes in the industry, right? It's lightning fast. It's sometimes it's actually quite difficult, even for us to kind of keep up with the pace, right, of the changes in the industry. Kailash mentioned about more than 100 payment methods, and that's exactly the kind of scale of change that we have to grapple with. The other thing is also bad actors in the industry, fraud, scam, which is a big thing, right? Especially, even in our own home context in Singapore, as I'm sure you've heard, Hanan, some of the cases that made big headlines last year with the banks and all that. And it's not something that is very straightforward, to be very honest, for payments companies to deal with, because it requires a lot of parties involved in the entire, transaction life cycle to play a part, right? We, as a payment company, we can do our part. We can put in the most secure processes, technology, safeguards out there. But if the users of such technology, right, don't play their part in terms of ensuring that their passwords, OTPs are not being shared with any third parties, that sort of thing, then whatever safeguards that we can put in place can be easily, right, overcome.
How about in your area, Kailash? What are the opportunities and what are the challenges?
Yeah, I think what John mentioned, quite complementary to what we are seeing. A lot of the challenges he listed, we see as opportunities for our business, because businesses like John's, they're grappling with changing customer expectations and trends, right? Like mobile penetration is increasing. Asia Pacific is a largely underbanked market. So you see a lot of alternate payment options like your wallets and bank transfers and convenience payments and buy now, pay later as opposed to credit cards, right? What this means is consumer expectations are much higher. The minute they come to the checkout page and see that pay button, they want to click pay and the transaction needs to be done. And if it's a physical good, it needs to be at their doorstep. So they're quite unforgiving that way, just because of the demographics. Like most people are between ages of 18 to 35, high mobile penetration rates. So they're quite unforgiving that way. And what that all means is, as a business, you need to be super agile and you need to have the flexibility to adapt to these new payment trends and ensure that the buying experience you offer to your consumer is the best possible one which is out there in the market. And that's how you differentiate yourself from competition. And that is what we see as the biggest opportunity for us, because that's the piece of the puzzle we are trying to solve, right? So we don't get involved in the flow of funds, or we don't have to be financially regulated. We're a pure play technology company which enables businesses to have access to these tools. So that I'd see as a big opportunity. On the flip side, I think as a challenge, what we're seeing is more on the macroeconomic side of things, right? You look at the global economy right now, I think interest rates are quite high. There's a high inflation kind of environment. Our discretionary spending is low at this point, although tech spend is expected to rise at about 6% in 2023. I think it's more cautious now, with a number of stakeholders being part of that buying decision, right? Now, what all this means is the appetite for buying services is largely driven by how much additional revenue can it bring to my business, how much operational efficiencies can it bring about, and John touched upon this, I think, is how much of my fraud and risk can it help mitigate, right? Like if you tick all of these three boxes, that is where you will have a strong advocate within any buying organization to make that purchase. So I think that's a challenge which most tech companies would need to overcome and demonstrate when they're having these conversations with businesses to show them value around these three key pillars and how they can help achieve these. E-commerce is growing year on year. I think it's grown 5x from 2016 to 2021, expected to grow 3x in the next 5 years again, expected to touch about $2 trillion by 2030. So all of this points to the fact that the world is going in that direction and digital payments is just following that trend. I think the second big benefit that comes from digital economy is how all of these are able to ensure that there's regional economic and social development, right? There was a Google-led study which I recently came across which said it created about 160K high-skilled jobs and indirectly supported about 30 million jobs because there were so many platforms that came online, which you just look at restaurants in Singapore, for example, right? Like all of these have adopted a table ordering system where you just scan a QR and a lot of restaurants come online, right? And they're able to do business. A lot of it was forced because of COVID, which accelerated their digital transformation journey, but it is there. It is still existing now, even in the post-COVID world. So I think just job creation is one other key pro that comes to mind.
The first form of digital payment is obviously the credit card and the debit card. There's also a form of digital payment. In the past, obviously, you had to sign a slip, but these days you can just do a paywave. So it's not something new. It's just that recently, maybe in the last 5 to 6 years, there are a lot of eWallets, the automatic payment methods, on top of the credit cards and the debit cards. So we now have the wallet that make it seem that only very recently digital payments have actually started, catching fire, but it's actually not the case. And in Singapore, about 90% of the population actually owns at least one credit card or multiple credit cards, right? So in Singapore, the Singapore society is already very, very digitalized when it comes to payments.
I think the only change in mindset that's going to happen from maybe the year before last to last year to this year is going to be sustainable growth and a lot more focus on profitability than growth at all costs, right? So that's going to be the theme, and how businesses are going to achieve that is by digitizing to optimize, right? So you have to digitize to ensure that your reliance on human and operational capital is minimal. You deploy your tech resources to the most value-adding parts of your business, which is your core business operations, and try and find solutions which can automate a lot of your other operational aspects of the business. It's the age-old saying which says continuity of business and the first principles of operating businesses, which is drive revenue, keep costs low, and keep risks low. I think as long as you do the basics right, you should be able to turn the tide.